Welcome to a new episode of the podcast. Vox Agent is made by AI for business executives that work with AI. Welcome to the Deep Dive, the show that gives business executives like you a rapid, insightful shortcut to understanding complex topics. Today, we're plunging into Agentic AI, what many in the financial world are already calling a game changer for retail banking. We're talking about AI that doesn't just give you insights, it actually does things autonomously. Some leading financial institutions aren't just predicting big shifts here. They believe agentic AI could spark an efficiency revolution even bigger, maybe, than the internet era itself.
That's a profound statement, absolutely. And it really underscores why this topic is so critical right now. Understanding agentic AI isn't just about, technological curiosity.
Yep.
It's really about grasping the fundamental shifts happening in our future economy. Knowledge, when truly synthesized and applied, creates immense value. And this technology, well, it's set to redefine so much of how financial services and, frankly, broader economic functions will operate.
Okay, so our mission today is to give you that quick, well-informed perspective. We'll unpack what agentic AI actually is, look at how banks are building and implementing these systems.
Yeah, the practical side.
Exactly. Then dive into its surprising real-world applications, highlight the massive benefits it promises, and then, crucially, discuss the challenges banks absolutely must navigate to leverage it successfully. By the end of this deep dive, you should have a really clear grasp of this transformative technology. So let's unpack this then. We hear about AI all the time, constantly. But what fundamentally distinguishes agentic AI from the AI we're sort of already familiar with, it kind of gives insights, but, stops short of action.
That's the core distinction, yeah. What's truly striking is the shift in AI's autonomy. We're moving beyond systems that simply suggest or analyze. Agentic AI can autonomously make decisions and execute multi-step tasks without constant human oversight.
Okay.
Think of traditional AI, like, say, a bank chatbot or maybe a data analytics engine. They might give you a report or flag an anomaly, right?
Standard stuff.
But they always needed a human to interpret, approve, and then take the next action. Agentic AI kind of flips that dynamic. It operates with what you called a do-it-for-me capacity.
Do it for me. I like that.
A concrete example probably helps here. An agentic AI doesn't just flag potential fraud. It might, all on its own, immediately freeze the suspicious transaction, notify the customer, and initiate the necessary steps to secure the account.
Wow. Well,
No human telling it to click next, no manual intervention needed in that specific chain of action. It's acting like a virtual team member.
that is a powerful shift. So how did we get here? Can you maybe briefly trace AI's journey in banking that led to this level of autonomy?
Sure. We've actually had AI in banking for decades, really, starting with fairly simple rule-based systems for things like credit scoring and basic fraud detection.
Right, the early days.
Then, in the 2010s, as digital banking really took off, we saw the rise of robotic process automation, RPA, handling those repetitive workflows, and more sophisticated machine learning for deeper customer insights. Lots of institutions launched AI-powered chatbots too, like Bank of America's
I
Erica.
remember that launch.
Yeah, but initially they were quite limited, mostly preset queries. The real acceleration has come in just the last couple of years, particularly through 2023 and 2024. This was driven by breakthroughs in large language models, LLMs like GPT-4, and just more advanced machine learning techniques.
Okay.
These advances have basically transformed AI systems into what many experts are now calling virtual coworkers, highly skilled digital partners available 24/7. This is the paradigm shift, really, where AI moves from strictly scripted automation to systems that can reason, learn, and adjust their behavior based on outcomes. Citibank even coined a term for this, the do-it-for-me economy, which I think really captures the essence of this proactive, self-executing AI.
The do-it-for-me economy. Okay. That brings us to the nuts and bolts then. How are banks actually building these autonomous systems? For our listener, how would you describe the technical infrastructure needed for AI to make truly autonomous decisions?
Yeah.
Like, what's the foundational layer they absolutely need?
Right. The foundation is absolutely critical. Couldn't agree more. Imagine a bank's entire knowledge base, every customer interaction, every transaction, every single data point, all in one perfectly organized real-time library.
That sounds like a dream for most banks.
It often is. But that's the unified data environment these AIs need, things like data lakes, customer data platforms, and really importantly, API-driven access to those often older core systems. Because fundamentally, AI is only as good as the data it learns from.
Right. Garbage in, garbage out.
Exactly. So breaking down those data silos is absolutely essential to give AI agents a comprehensive, 360-degree view of customers and operations. Without clean, integrated, real-time data, agentic AI it can't function effectively at scale, period.
Okay, so let's say they get the data layer right. It's unified, it's clean. What are the actual decision-making brains of these agents? What sits on top of that data?
Good question. That's where the AI models and decision engines come into play. This is usually a powerful combination of things. You've got predictive models for stuff like risk scoring, rules engines to enforce specific policy constraints, the hard rules.
The guardrail.
Precisely, the guardrails. And then generative AI or LLMs for understanding unstructured inputs like customer emails and conversing naturally. But what's crucial here and what truly sets agentic AI apart is the inclusion of agent frameworks.
Agent frameworks. Okay, tell me more.
Think of these as the AI's project managers, maybe. They plan out the steps needed to achieve a goal, they delegate subtasks to specialized AI mini-agents, and they make sure the entire process flows smoothly. You'll often have multiple AI agents working together, specializing in different things, like one handles identity verification, another watches transactions, and they coordinate their outputs.
So like a little AI team.
Kind of, yeah. And these agents always operate under those predefined goals and business rules we mentioned, the guardrails set by the bank. This ensures their autonomous actions stay within acceptable, pre-approved bounds.
It sounds incredibly complex, but also incredibly powerful. How do these AI decisions actually turn into actions, though? How do they connect to the bank's, sprawling operational systems, the core banking stuff?
Yeah, that's the integration and workflow automation layer. This is typically achieved through robust integration, middleware think APIs, and sometimes robotic process automation, or RPA, especially for older systems.
Okay.
So when an AI agent decides to, let's say, waive an overdraft fee as a goodwill gesture based on customer history, it uses these APIs or RPA bots to actually perform that action directly in the core banking system. No human intervention needed for that specific step. This layer is what allows an AI's insight or decision to immediately translate into an operational step seamlessly.
Got it. And once these agents are deployed, how do they improve? Do they get smarter? Do they learn and adapt? Or are they just static rule followers?
Oh, they absolutely learn. That's a key part. Context awareness and learning mechanisms are built in. This involves continuous feedback loops. It could be online learning from new data as it streams in, reinforcement learning based on outcomes, or maybe human-in-the-loop feedback for fine-tuning.
So like if a customer is happy with an interaction.
Exactly. For example, an AI customer service agent might analyze which automated resolutions led to the highest customer satisfaction scores and then adjust its approach over time. But, and this is critical, especially for executives listening, you absolutely need security, controls, and oversight.
The governance piece.
The crucial governance piece. Because these agents have autonomy, stringent controls are essential. Every action needs to be logged and traceable for audit purposes. Many banks are using what's sometimes called an AI control tower.
An AI control tower, like air traffic control.
Pretty much. Think of it like that, but for AI agents. A human team sits there, monitoring autonomous actions, ensuring decisions are sound, and that operations run smoothly within those guardrails we talked about. And, most importantly, fail-safes are built in.
Okay, what happens if it gets stuck?
If an agent encounters an unknown scenario, or maybe a decision that's clearly beyond its programmed scope, it should automatically defer to a human operator, hand it off. This ensures that final accountability remains with authorized personnel, which is, as you can imagine, a critical point for regulators.
Absolutely. Okay, here's where it gets really exciting, I think. Let's talk about some tangible examples. Where are we seeing agentic AI in action right now from leading financial institutions? Because that's where we really see the impact, right? Take Bank of America's virtual assistant, Erica. You mentioned it earlier. It seems to have evolved significantly.
It really has.
Erica now apparently proactively monitors and manages customer finances, sends spending alerts, or even initiates fraud protection actions autonomously.
Yeah.
That's a huge leap from just answering basic questions.
It really is a massive leap. And look at JP Morgan Chase. They're using AI agents not just for routine customer service Q&A, but also to actually pre-approve certain loan applications in seconds.
In seconds?
Really? Yeah, think about that. This used to be a task that could take human underwriters days. But their AI analyzes data across multiple internal systems simultaneously to make these decisions, dramatically accelerating the whole process.
Wells Fargo, too, right? They have some impressive applications, particularly in security.
Their AI agents for fraud detection are a good example. They can automatically freeze an affected card, send a real-time alert to the customer, and even trigger the dispute resolution processes, all without immediate human intervention. That's real-time protection actually happening.
And Capital One. I heard something about mortgages.
Yes. Capital One uses Agentic AI for mortgage pre-qualification. An AI agent pulls credit bureau data, verifies income electronically, calculates debt-to-income ratios, and can issue a preliminary loan approval within minutes. Again, dramatically streamlining a process that was traditionally very lengthy and, frankly, quite manual.
It seems like beyond these big names, it's becoming a broader trend. Our analysis shows several large banks are using AI agents for things like account opening and customer onboarding. Verifying IDs and performing Know Your Customer, or KYC, checks in just minutes. It really emphasizes this do-it-for-me capability across a whole range of core banking functions.
You're absolutely right. We're really at an inflection point. Agentic AI is moving from being this, cutting-edge innovation to becoming common practice, or at least the goal. The adoption rates are telling. Estimates suggest maybe 85% of financial services institutions will be using AI in some significant capacity by 2025.
85%, that's huge.
It is. And already, something like 91% of U.S. banks now use AI in some capacity just for fraud prevention. So this isn't just some niche technology anymore. It's rapidly becoming foundational.
So what does this all mean for the competitive landscape then? It really sounds like banks that are early adopters of agentic AI gain a truly significant edge.
They absolutely do, no question. By delivering superior customer experiences, more personalized services, and achieving, frankly, cost leadership through automation, these early adopters can attract and retain more customers. We're definitely seeing a clear divide emerging.
Between the haves and have-nots.
Sort of. Those banks that hesitate on agentic AI risk being outmaneuvered. And not just by the nimble fintech challengers, but also potentially by the tech giants, the Googles, Apples, Amazons of the world, and even by their traditional competitors who are aggressively adopting this capability.
So the big incumbents are moving fast.
Oh, some are, yes. Large incumbents like JP Chase and Bank of America are clearly leading the charge in many areas. But you also have fintechs, often unburdened by those legacy systems we talked about, building AI-first models from the ground up.
And big tech is watching.
Big tech is absolutely watching and participating. With their advanced AI capabilities and massive user bases, they're showing increasing interest in financial services, which just puts more pressure on traditional banks to innovate faster. Ultimately, AI capability is becoming, a core element of strategy, much like capital or talent always have been.
That's a powerful statement. Okay, let's delve into the value proposition more directly. It sounds like agentic AI has this dual impact. It helps on the cost reduction side and the revenue enhancement side.
That's precisely right. It hits both sides of the equation. On the cost side, the savings from automating repetitive, high-volume tasks are significant. Our research indicates something like 82% of financial institutions report lower operational costs from deploying AI agents.
82%.
And we're talking about potentially enormous global savings. Some estimates go up to $1 trillion by 2030 for the banking industry worldwide.
$1 trillion.
Yeah. Think about that scale for a second. That's the level of efficiency gain we're potentially looking at here. It frees up employees from more strategic, value-added work. Then, on the revenue side...
More personalization.
Exactly. AI agents analyze vast amounts of customer data to offer truly tailored advice, product recommendations, and solutions in real time. This leads to higher customer satisfaction and better retention. In fact, 46% of financial firms report improved customer satisfaction after AI integration.
Nearly half.
Nearly half. And beyond that direct impact, it leads to vastly improved risk management, faster fraud detection, dynamic credit adjustments, real-time compliance enforcement, plus you get seamless 24/7 customer service availability and greater strategic agility for banks to adapt quickly to market changes. It's a compelling package.
It really is.
Yeah.
But despite all this excitement and potential, implementing agentic AI clearly isn't, flicking a switch. It can't be easy. What are some of the biggest challenges banks face in truly leveraging this technology effectively?
You're right. There are definitely significant hurdles. First off, that technical integration piece we touched on. Integrating with legacy systems. Many banks still operate on decades-old core banking platforms.
That's mainframe.
Exactly, making it incredibly difficult and costly to integrate modern AI agents that need real-time data access across these fragmented, sometimes archaic stacks. Then there's data quality and availability itself.
Garbage in, garbage out again.
It always comes back to data. AI is only as good as the data it learns from. And if that data is incomplete, inconsistent, or worse, biased, it can lead to inaccurate or even discriminatory outcomes in things like lending or customer service.
And the black box problem, the fact that we don't always know why an AI made a certain decision. How do banks deal with that when critical financial decisions are being made?
That's a huge one. Algorithmic bias and fairness become a major challenge. When these complex models are effectively black boxes that don't easily explain their reasoning, it can definitely lead to unintended biases, maybe in loan approvals, maybe in product offers, maybe in how different customer segments are treated.
And what's the solution?
Well, banks need to implement explainable AI or XAI techniques. They need rigorous bias testing frameworks, and they have to ensure they use diverse representative training data to mitigate this risk as much as possible. This also ties directly into accountability and governance.
Right. Who's responsible if it goes wrong?
Exactly. If an AI agent makes a wrong decision autonomously, who is ultimately accountable? Legally and ethically, the bank is. So you need those robust audit trails we mentioned, and those AI control towers for human supervisors become absolutely crucial. Security and privacy risks are also expanded.
How so?
Well, autonomous agents that can traverse multiple systems and access vast amounts of data inherently create a larger threat surface for cyber attacks. It's like adding more doors and windows to your house, great for access, maybe, but each new opening means robust security. Banks need AI-tailored cybersecurity strategies.
And of course, the regulators are watching closely.
Always. Regulatory compliance and just general legal uncertainty is a significant hurdle. The regulatory environment is still evolving rapidly around AI, especially autonomous AI globally. Banks worry, understandably, that today's compliant deployment might be deemed non-compliant tomorrow as rules change.
Like the EU AI Act, for example.
Precisely. And finally, there are the ethical and trust issues with customers. People might be uncomfortable or just plain distrustful of AI making important decisions about their finances, especially if the process isn't transparent. Banks absolutely need to ensure transparency with users about how their data is being used and how decisions are made. Offering opt-outs or easy access to human review on request is key to building and maintaining that essential trust.
That does sound like a bit of a minefield to navigate. But you mentioned earlier, these challenges aren't insurmountable. How are the leading institutions actually navigating them?
They absolutely are not insurmountable, no. But it requires very careful planning. It demands significant investment in modern data infrastructure, building those rigorous governance frameworks we discussed, and usually taking a phased approach. You don't just switch everything on at once.
Pilot programs first.
Often, yes.
Yeah.
Starting with controlled pilot programs in less critical areas. Learning, refining, and then scaling. Keeping humans firmly in the loop, especially for oversight and handling exceptions, is vital. And training staff, not just on the tech, but on how to work alongside AI effectively, is also crucial. Honestly, successfully navigating these challenges can actually become a competitive advantage in itself. It shows maturity and responsibility.
Okay, so bringing it back to our listener, who's likely a business executive listening to this, what does all of this mean for your organization, whether you're in banking or not? What are the broader implications?
Well, I'd say agentic AI, or at least the principles behind it, represent a strategic imperative far beyond just banking. It demands a shift towards an AI-first mindset across the enterprise, thinking about how autonomous systems could optimize processes. This definitely means workforce transformation.
Reskilling and new roles.
Absolutely. Upskilling existing staff, yes, but also creating new roles we haven't even fully defined yet. People who manage AI agents, AI ethicists, AI trainers, AI architects. It requires significant cultural change, too, fostering data-driven decision-making top to bottom and encouraging a much more collaborative mindset between business units and technology teams. And ultimately, none of this happens without strong executive sponsorship.
To drive the vision and resources.
Exactly. To allocate the necessary funding, break down those inevitable organizational barriers and silos, and ensure AI initiatives are tied directly to clear strategic goals. That's how you drive real ROI and hopefully enhance customer loyalty.
Looking ahead, crystal ball time maybe. What's next for agentic AI, specifically in banking, over, say, the next 3 to 5 years? How will this truly reshape the industry?
Okay, looking ahead, I think we anticipate much more mainstream adoption. By maybe 2028 or so, we could see autonomous agents handling a really substantial portion of routine banking decisions and tasks. We'll likely see the evolution of multi-agent ecosystems.
Swarms of AI agents.
Kind of like that, yeah. Swarms of specialized AI agents collaborating seamlessly to tackle complex end-to-end processes that currently span multiple departments and require lots of handoffs. Hyper-personalization will get even deeper. What we might call a financial GPS.
Financial GPS.
Yeah, AI anticipating customer needs even before they fully recognize them. For example, an AI detecting early signals that a customer might be starting a family and proactively offering personalized college savings plans, or maybe suggesting mortgage refinancing options based on their changing life circumstances.
That sounds incredibly proactive.
Yeah.
Almost predictive. What about the workforce impact then, looking ahead?
The workforce transformation will definitely continue and probably accelerate. AI will increasingly augment employees, taking over more routine tasks. Human-AI collaboration will become a defining feature, I think, of the future workplace in banking. Repetitive tasks will decline further, but new roles focused on AI oversight, ethical guidance, creative problem-solving, and high-touch, complex customer relationships will emerge and become more important.
So humans move up the value chain.
That's the idea. We also expect to see entirely new service models emerge, things like banking as a service or BOSS, where banks might white label their sophisticated AI agents and platforms to other businesses, maybe smaller banks or fintechs, and perhaps even truly on-demand banking products created instantly by AI for highly specific temporary customer scenarios.
Wow, that's quite a vision. Any caveats?
Well, it's worth noting, of course, that while the trajectory seems clear, potential disruptions could happen. A major AI failure causing significant financial loss or reputational damage, or perhaps overly heavy-handed regulation introduced too quickly, could certainly slow innovation temporarily. So a balanced perspective, acknowledging potential bumps in the road, is crucial.
Understood. Wow. So to try and recap our deep dive here, agentic AI is truly moving retail banking from being, somewhat passive transactional service providers into potentially proactive, intelligent partners for their customers. It feels like it's about achieving unprecedented transformation.
Absolutely. I think you summarized it well. It's really about aiming for a dual victory, enhancing customer engagement and personalization to completely new heights while simultaneously driving down operational costs through intelligent automation. Embracing agentic AI isn't just an option anymore. I believe it's rapidly becoming a competitive necessity that will truly separate the leaders from the laggards in the coming years.
And the winners will be those who blend human and machine best.
I think so. The future leaders will be those institutions that figure out how to optimally blend human and artificial intelligence, leveraging AI for its strengths, scale, speed, consistency, data analysis, and leveraging humans for their unique strengths, creativity, empathy, complex judgment, ethical reasoning. That combination is incredibly powerful.
So maybe to leave you, our listener, with a final thought to ponder. Could your choice of bank in the future be based not just on its interest rates or the number of branches it has nearby, but on how smart, how proactive, and how genuinely helpful its AI assistant is, akin maybe to how you choose a smartphone based on its OS and app ecosystem?
It's a fascinating question. This shift is profound, and as we've discussed, its implications extend far beyond just banking. We'd encourage you to consider what areas within your own domain, your own business, might benefit from this level of autonomous intelligence support. Understanding these shifts, we believe, is absolutely key to navigating the future successfully.
Thank you for joining the podcast, and see you soon.